Something strange is happening in the silver market right now, and most people have absolutely no idea it's going on. While mainstream financial news is busy talking about stocks and crypto, a quiet but powerful signal has been flashing in the precious metals world. Silver has been holding above $91 per ounce, and that single number, that one line on a chart, has suddenly become the most talked about level among serious traders and institutional investors across the globe. Now you might be asking yourself, why does one price level matter so much? Why would seasoned traders who have seen every kind of market condition suddenly stop and stare at a number? That's exactly what we're going to break down today. But here's the thing, this story isn't just about charts and numbers. It's about what this moment could mean for your money, for the economy, and for a metal that has quietly been setting up for something much bigger than most people realize. Stay with me, because by the end of this video, you are going to understand something that most investors won't figure out until it's too late. And trust me, you don't want to miss what's coming next. Let's go back about 18 months. Silver was trading in a relatively calm range, hovering somewhere between $26 and $32 an ounce. Most retail investors had basically forgotten about it. The excitement was all in tech stocks, in artificial intelligence plays, and crypto rallies. Silver was the quiet kid sitting in the corner that nobody paid attention to. But underneath that calm surface, something was building. Industrial demand for silver was quietly exploding, not in a way that made headlines every day, but in a way that the smart money was absolutely tracking. Solar panel production globally was hitting record levels. Electric vehicle manufacturers were increasing their silver consumption per unit. The green energy transition, which governments around the world had committed hundreds of billions of dollars toward, was eating through silver supply faster than mines could replenish it. And here's the thing about silver that makes it completely different from gold. Roughly 55 to 60% of all silver demand comes from industrial use. That means silver isn't just a financial asset sitting in a vault, it's a working metal. It gets consumed, and once it's consumed in industrial processes, most of it never comes back into the market as investable silver again. So when industrial demand spikes and mine supply stays relatively flat, you get a supply deficit. And that's exactly what started happening. Reports from the Silver Institute began showing consecutive years of supply deficits. The above-ground stockpiles of silver that markets rely on as a buffer were being drawn down. And yet, for a long time, the price didn't fully reflect this reality. That gap between the fundamental story and the price action created an enormous coiled spring tension in the market. Sophisticated traders and hedge funds started positioning quietly. They weren't talking about it loudly. They were just accumulating. Now fast forward to where we are today, and suddenly silver is sitting above $91 per ounce. Let that sink in for a second. When silver was at $28, $91 would have seemed like a fantasy to most people. And yet, here we are. But the really fascinating question isn't just how silver got here. The question that's keeping traders glued to their screens right now is whether this level holds. Because $91 isn't just a round number. It's a critical technical and psychological support zone that has transformed from resistance into what traders call structural support. Before we go any further, if you are finding this breakdown valuable and you want to understand what's really happening in markets before the mainstream catches on, hit that like button right now and subscribe to John AG 1.0. We cover the stories behind the stories, the things that serious investors are actually watching, not what the financial entertainment media tells you to watch. Hit subscribe and the notification bell so you never miss one of these breakdowns. Now let's talk about why this $91 level is so significant. When a price level that was previously a hard ceiling suddenly becomes a floor, it tells you something profound about market psychology. Think of it like a building. For months, the $91 area acted like the ceiling of the room silver was trapped in. Every time silver approached that level, sellers would show up in force, pushing the price back down. Traders who had been holding long positions near that level would take profits, and the price would retreat. This happened multiple times, multiple tests of the same resistance zone, and each time it failed to break through, more and more traders became convinced that $91 was an unbreakable ceiling. But then, something shifted. The market absorbed all those sellers. Every time silver was pushed back down, buyers came in with more conviction and at higher prices. The correction became shallower and shallower. And then one day, silver didn't just touch $91, it pushed through and kept going. And here's the psychological magic of markets. The moment it pushed through cleanly, all those traders who had been selling at 91 suddenly became motivated to buy back in if the price came back down to that level. The ceiling transformed into the floor, and now you have a situation where $91 is no longer just a technical level. It's a psychological line in the sand for an enormous number of market participants. The reason traders are watching it so closely right now is because the next test of this level will be defining. If silver pulls back toward 91 and finds buying support there, if it bounces off that floor convincingly, It sends a powerful message to the entire market that the structure is intact, that the bull case is still valid, and that higher prices are the most likely path forward. But if silver breaks back below $91 and stays there, it would invalidate the entire setup and likely trigger a wave of technical selling that could push prices back down significantly before the real fundamental story reasserts itself. This is the knife edge moment that traders live for. The uncertainty creates opportunity, but it also creates real risk. And understanding that tension is the difference between making a smart, informed decision and just blindly chasing a moving price. Now here's where the story gets even more interesting. Let's talk about the macro backdrop, because silver doesn't exist in a vacuum. Silver is extremely sensitive to two major forces: real interest rates and the US dollar. When real interest rates fall, meaning when inflation-adjusted returns on bonds and cash decline, the opportunity cost of holding a non-yielding asset like silver drops. It becomes more attractive. And when the US dollar weakens, silver and gold denominated in dollars become cheaper for international buyers, which increases global demand. Right now, the market is navigating a complex transition. The Federal Reserve has been signaling a shift in its interest rate posture. After years of aggressive rate hikes designed to combat the post-pandemic inflation surge, the trajectory has turned. Real rates are expected to decline over the next 12 to 18 months. Historically, that kind of environment has been extraordinarily bullish for precious metals. You go back and look at the major silver bull markets of the past several decades, and almost every single one of them had declining real rates as a key ingredient. We have that ingredient on the table right now. And then there's the geopolitical dimension. Global uncertainty has been rising, not falling. Major economies are wrestling with debt levels that are genuinely unprecedented in peacetime history. The United States alone is running deficits that are adding trillions of dollars to the national debt every single year. Other major economies are in similar or worse positions. Historically, when sovereign debt levels reach these kinds of extremes, and when trust in fiat currency management starts to erode even slightly, capital begins migrating toward hard assets. Gold gets most of the headlines when this happens, but silver often outperforms gold in the explosive phase of a precious metals bull market because it starts from a lower base and has a smaller market, meaning new money flows have a proportionally larger impact on price. There's a ratio that long-time precious metals investors follow obsessively called the gold to silver ratio. It measures how many ounces of silver it takes to buy 1 ounce of gold. Historically, this ratio has averaged somewhere in the range of 45 to 60 over long periods of time. When the ratio is high, it suggests silver is historically cheap relative to gold. When the ratio is low, silver is relatively expensive. Right now, even with silver's strong recent performance, the ratio remains elevated compared to its historical average. That tells you that if we enter a full-blown precious metals bull market, silver has significantly more catching up to do relative to gold. It's not just that silver could continue rising, it's that silver might have more percentage upside than gold in this particular cycle. Now, I want to share something with you that most analysts don't talk about, and it goes back to those supply deficits we mentioned earlier. The technology sector's hunger for silver is not slowing down. Artificial intelligence data centers require massive amounts of electrical infrastructure. Silver is the best electrical conductor of any metal on Earth. The build-out of renewable energy infrastructure globally, solar farms, wind installations, battery storage systems, all consume silver at scale. The electrification of transportation is ongoing and accelerating. These aren't speculative trends. These are already committed capital expenditures by governments and corporations that will play out over the next decade and beyond. The silver that gets consumed by these industries doesn't come back to the market. It's gone. And the mining industry, after years of underinvestment during the period when silver prices were low, cannot simply flip a switch and dramatically increase supply. New silver mines take 7 to 10 years from discovery to production. The supply response to today's high prices won't be felt for years. This is what fundamental analysts mean when they talk about a structural supply deficit. It's not a short-term blip. It's a multi-year mismatch between supply and demand that, if it persists, and the data suggests it will, creates a powerful underlying bid for the metal that is very difficult to argue against. So, what does all of this mean for you as someone watching this video? Let's put together everything we've discussed and think about this clearly, because this is the most important part of everything I'm going to tell you today. Silver holding above $91 is not just a trivia fact. It's a signal. It's the market telling you that something significant has shifted. The level represents a confluence of technical significance, institutional positioning, fundamental support from supply deficits, and macro tailwinds from the interest rate and currency environment. When you have all of those factors pointing in the same direction, that's when experienced investors pay the most attention. None of this means that silver goes up in a straight line from here. Markets never do that. There will be pullbacks. There will be scary moments where the price drops sharply and everyone who got in starts to doubt themselves. That's the nature of investing in volatile assets. Silver can move in dramatic and emotionally challenging ways, and if you're going to participate in this market, you need to understand that going in. But the difference between someone who navigates those pullbacks successfully and someone who panic sells at the worst possible time is usually understanding. When you understand why you own something, when you understand the fundamental and technical case behind a position, you can hold through the noise. And the people who can hold through the noise in a sustained bull market are the ones who capture the real wealth-building moves. There's one more dimension to this story that I want to leave you with, because I think it's the most thought-provoking part of everything we've covered. Silver has an interesting psychological quality that gold doesn't have. Because silver's price is lower per ounce, it feels accessible to everyday people in a way that gold doesn't. When gold is trading at several $1,000s per ounce, owning a meaningful amount of gold requires significant capital. But silver, even at $91 an ounce, is still something that an ordinary person can accumulate in meaningful quantities. That accessibility matters for market dynamics. As financial media coverage of silver increases, as the story of the supply deficit becomes more widely understood, the pool of potential buyers grows enormously. Retail participation in a market where institutional players are already positioned can create the kind of momentum that produces dramatic and rapid price moves. We may or may not be at the beginning of one of those moves right now. The $91 level will tell us a lot about whether the structure is truly as strong as the bull case suggests. But the combination of factors pointing towards silver, right now, the technical setup, the supply fundamentals, the macro environment, the industrial demand story, is about as compelling as anything this market has seen in years. Now, I want to hear from you, because this community is filled with some genuinely sharp thinkers, and your perspective matters here. Drop a comment below and tell me, do you think silver holds above $91 and continues higher? Or do you think we're setting up for a fake out that pulls price back down? I genuinely read the comments on every video, and some of the best insights I've gotten about markets have come directly from this community. Also, if you know someone who follows precious metals, who invests in commodities, or who has been curious about silver but never quite understood the story behind the price action, share this video with them. It takes 2 seconds, and it might genuinely be some of the most valuable information they encounter this year. The people who understand what's happening in silver right now have a real advantage over those who are only going to read about it after the fact. This is John, AG 1.0, and we'll see you in the next one.